welcome to this panel to discuss all things Web3. I would be very surprised if there was anyone in this room who hasn't heard of Web3, who's not building for Web3, and who's not helping to scale Web3 on the continent as well. Before we get into things, I would like my fellow panelists to introduce themselves, please. Let's keep it to 30 seconds so we can get into discussion, and then there'll be Q&A at the end. So, Stephen, let's start with you.
I feel very far away from everybody.
It's giving COVID energy, isn't it?
Post-COVID
energy.
So really delighted to be here. Stephen Browne, CEO of Sorted Wallet, which is a cryptocurrency, non-custodial cryptocurrency wallet that we target for simpler, older legacy devices with the intention of bringing the benefits of USDT and Bitcoin to as many people as possible. Thank you.
Thank you very much. Chris?
I'm Chris Duffus, founder of and CEO of Fonbnk, and we are a bridge or gateway to Web3, targeting mobile-first, cash-based economies like those throughout the continent and now Latin America and Southeast Asia. And what makes us unique is that we focus on converting prepaid mobile payment methods into stablecoins on all the leading L1, L2 networks. And so we address your stablecoin settlement requirements to help monetize your applications globally.
Thank you very much. Last but not least, Mouloukou.
Hi, my name is Mouloukou. I'm the CEO and co-founder of Mansa. At Mansa, essentially, we're a stablecoin fintech that provides on-chain pre-funding liquidity to some of the biggest cross-border payment companies in LATAM, Southeast Asia, the African continent, to essentially enable them to settle transactions instantly, faster, better, and cheaper.
Fantastic. Thank you very much. So we know that Web3 is really, I guess, reshaping financial infrastructure across the continent. It makes sense. You know, we are known on the continent as well for having a huge amount of innovation. We're driving a lot of that innovation. Mouloukou, you mentioned stablecoins, and I went asking around ahead of this panel. The word stablecoin came up a lot, so I guess we'll be covering that. But I guess let's start with what's really important, and I guess a classic buzzword of financial inclusion. Stephen, this one is for you. So we know, like I said, 75% of adults in sub-Saharan Africa lack access to formal financial services. Can Web3, especially stablecoins, be a game changer? All right, I'm guessing the answer is yes, but I guess how can it be?
Well, like I suppose with all of these things, it's going to take time, and
Well, we can't hear you. Maybe hold it closer.
Hold it closer.
Yeah.
Okay, thank you. So the answer is definitely yes, but I think that the time to get there is going to be a lot longer than people think. From what we see of users of our application, the feedback that we get is they're still trying to understand what a transaction is. They're trying to understand what the settlement time is. Can they trust this? So crypto, for better or for worse, does not exactly have a 100% strong name. A lot of people associate it with negative things. So to kind of get over that, it's going to take a lot of time. Unfortunately, stablecoins are part of that negative perception in some cases. So I think a lot of it is educating the user that yes, stable coins work, they can work for you, and don't be scared to use them. So, a lot of the complexity around crypto, onboarding, gas, swapping between chains, people don't want to do that. And frankly, I don't want to do it, even though I do it all the time. So, on the technical level, we need to keep trying to abstract all of that away. What Chris is doing at Fonbnk, is helping that. What Tether have done with the cross-chain USDTO, all those initiatives are helping, and we need more of it. So answer is yes, but it's going to take time.
Thank you. And Chris, I know that you've got something to add to that as well, but I guess it would also be great if you speak to, is it just like a terminology thing? Do people hear the word stablecoin and they're getting nervous about it? Is there a way to simplify it in order to seek better product market fit?
Yeah, I mean, it's kind of like describing a car by a combustion engine that uses, this mineral from the earth that's been liquefied to put in the tank. Like that, and so even though it's built by engineers, it's not marketed to consumers in the way that other consumer services that have mainstream adoption have. And so at Fonbnk, and we work with many of the leading non-custodial wallet providers globally who want to enter the market here, like sort of. But a lot of this, we like to say is we take away the complexity of this, what stablecoins are, and if you can top up your mobile phone, you can now get access not just to Web3, but the global digital economy, whether it's to buy things, to buy a ticket, to go somewhere, right? This is, and I remember, and I'm old, I have a few gray hairs, when they first talked about sort of the internet, they'd say, we're going to be doing e-business, right? And I remember my dean from my business school, he's like, so, one day they're just going to call it business. Well, I would say the same as like stablecoins. It's just, a new terminology or lexicon or set of standards in global money movement. And ultimately it will be, as I said, is, from a consumer aspect, as simple as like, hey, I topped up my phone, right? I topped up my wallet, right? It doesn't matter what it is as long as it works. And I think people are seeing as a testament to many of us here in this room and the conference, but having this type of infrastructure is a better, faster, cheaper, game-changing solution for markets like ours.
Perfect. And then, so what are the other use cases then? Help educate us with some of the other use cases for stablecoins. And that question is actually open to everybody as well.
Well, again, I think a misnomer about stablecoins is that they're stable, right? You think about many of the relative currencies to one another, they move, and they can be just as volatile as a long tail coin or something like a Bitcoin, unfortunately. And so one terminology I'd like to maybe standardize a little bit more is flat coins. And so one of the big use cases from a B2B standpoint is just flat settlement, right? You don't have to go through intermediaries. And so, the obvious sort of use case in markets like this are cross-border payments, and the reason being is I can get my money near instantly. I don't have to necessarily go through certain intermediaries to receive the value in my wallet, and if there are quality on and off ramps like Fonbnk that can enable local currency liquidity into whatever payment rail that I use regularly, mobile money, and or bank transfers, or even prepaid airtime. I now have a standardized use for all my basic sort of consumer financial needs, whether it's to buy coffee, pay rent, school fees, book airline tickets, pay my friends Mo for taking us out to dinner later this week. So I think, again, it goes back to that point about, e-business versus business. It's gonna just be how we conduct commerce in the near future.
Great. And so you've mentioned, the dawn of the internet and the term e-business. This question to you, Mouloukou, is stablecoin is it a young person's game then? Obviously we're dealing on a continent with high youth population. How is it going to affect, Africa's youth population in particular?
Yeah, so I don't really think, so in order to understand essentially why stablecoins have become so widely used on the African continent, we need to look at a few trends. For example, if you take the Nigerian naira, it has devalued, I think, over 400% against the dollar in the past 5 years. Same thing with the South African rand. So if you're a business that's earning revenue in naira, but you have loans essentially in US dollars, you're completely screwed up, right? So that's one of the main reasons why essentially stablecoins have become so widely used. The second main reason essentially is cross-border payments, right? Countries like South Africa have very strict capital controls where it's almost impossible to get US dollars, but with stablecoins, because it's on-chain, it's not a finite amount. So you can easily move money in and out without capital controls. And thirdly as well is that the speed and the efficiency at which you can do these cross-border transactions, right? So one of the main reasons that payments into emerging markets fail is because of a lack of liquidity in the system. But with stablecoins, you can send money anywhere instantly as quickly as possible. So essentially, I think last year there were 160 billion crypto transactions on the African continent. Over 80% of that was in stablecoins. And that's the same thing in Latin America and the same thing in Southeast Asia. So just to answer your question, no, I don't think it's a young person's game, but I do believe it's a technology that's going to make transactions in emerging markets cheaper, better, and more efficient.
Great. And then this question is for everyone, but how far are we into the use of stablecoin, its adoption on the continent? Are we literally just touching the edge? You mentioned some really interesting, some big data there. I know, I read recently about Juicy Way. They've already done $1 billion in worth of transactions. The numbers sound pretty big, but I'm guessing they're going to get even bigger. And most companies are just on the beginning of the journey. Stephen?
Yeah, I can't really speak to the B2B side, but the P2P payments, I think, is from my perspective, working with a lot of our customers are in rural communities, border towns. We're just getting started. Like the type of support requests we get into our app and the questions that we get, certainly give us the impression that people are just learning about this for the first time. So, we're just the first part of a 5-part movie. We've just halfway through the first movie. Yeah.
The match has just started, and I believe part of this, one of the big issues with crypto adoption from a business and sort of more popular culture and even a regulatory perspective, I think it's been a psychological barrier. Yes, there have been some bad actors, but if we held crypto to the same standard we hold fiat money, all money would be banned, right? That said, I think from a tailwind and change of an accelerator, so to speak, will be the U.S. government and how the new administration is changing perception of crypto regulation, not just in the U.S., but globally. And if you want to partner with U.S. institutions, who are very sort of bottom line cost driven, this is going to be the better, faster way to do it. And I think from a regulatory standpoint, locally, I think you're going to start seeing more acceptance and tolerance and can-do attitudes towards allowing crypto, especially stablecoin, as part of or flat coins, as part of the sort of money stack that people use. So and I think 2025 will look back at it, and it will be the year of broad institutional adoption, or where the match start for this.
That's interesting. And, you touched upon regulation. And obviously there will be diversity across the continent in terms of regulators. But in your opinions, what are African regulators doing right, and what do they need to do better? Question, Mouloukou, you want to start there?
So I think it's really important to separate stablecoins and the rest of what's happening in crypto, because from a regulatory perspective, stablecoins are, number one, much easier to understand. There are very clear benefits for everybody involved, right? From the regulators who need more access to US dollars, to the businesses, right? To the consumers, so on and so forth, right? And we've seen countries like South Africa actively take the lead and creating their VAPS regime. Or in Kenya, I believe a few weeks ago, they had an open dialogue about the use of stablecoins, right? So we're seeing countries like South Africa and Kenya really at the forefront of it. But Christian was actually really correct when he said that the new incoming US administration is really trying to push stablecoins globally. And I still believe that we're at the very beginning and that all payments will essentially move on chain.
Would anyone else like to weigh in on the regulation discussion?
I think one of the reasons I got in this business, I come from the telco and finance world, but there are many countries or companies that do multinational business, and they have, within this continent, billions upon billions of dollars that are stranded, right? And that's a problem. And I think from a regulatory standpoint, if you want global companies to invest in your economy, you have to give them free access to capital and money movement. And if it means that, some majority of their earnings are trapped within your banking system and you won't allow it out, they won't do business there anymore. And so I do think stablecoins are a way to address that. But I would, I think there are sort of monetary policy issues that need to be addressed. Stablecoins, which are dollars anyway, right? They're just wrapped in a different way. And many would even describe stablecoins as sort of the new euro dollar. It's the digital euro dollar, right? And I do think enabling a higher velocity of business commerce in your economies, I think, is a good thing.
And just to add to what Christian has said is that I see no difference between the money that's in my M-Pesa and my stablecoin that's on chain. It's literally because they're both essentially representation of a fiat currency, correct? So from a regulatory perspective and from an education perspective, given the use of mobile money across the African continent, I think it's going to be an easy adoption.
Stephen, you had something to add?
Well, just kind of more broadly, I've been working in crypto for, this year is my 8th year, and I've seen so much crazy scams, fake conferences, fake people, fake everything. So, as regulation has crept in, a lot of that is stopping, and we need consumer protection. There has to be better consumer protection because people lost a lot of money. So, aside from stablecoins, my worry is that, the legislators will just lump in stablecoins with crypto and be like, no matter what crypto it is, whether it's tokenized, whatever, real estate or dollars or meme coins or shit coins or whatever, they'll just put it all in one basket. So let's wait and see, but we definitely need regulation to protect people.
And I'd also add too that a standardization in this regulation specifically focused on consumer protections and disclosure is probably the biggest, most important step for regulatory. Is like, hey guys, just tell me what it is that I'm actually putting my money into as a consumer, and that's one of the more difficult things in crypto. One thing to add, I do think there should be, or there will be an increase of sort of local flat coins denominated in the fiat currencies. And it's a much more elegant way to enable cross-border intra-country trade than sort of what is currently available. And I think that's an area of focus for either regulatory, central banking policies, et cetera, where resources should be put into.
And then on that, in terms of fiat, so how, in layman's terms, how are stablecoins or flat coins disrupting fiat and traditional banking and money?
Yeah, I'll answer that. Okay, so essentially, the reason why I believe stablecoins are much better than fiat currency is just the speed and the efficiency at which you can move it. It doesn't matter where in the world you are, as long as you have a phone. It doesn't have to be an iPhone. As long as you have a phone, you have internet connection, you have a wallet, I can send you a stablecoin, like USDT, which we prefer, instantly, right? It doesn't matter where you are. But if we're doing a fiat transaction, especially to Africa, for my business bank account in Hong Kong, I cannot send any transactions to Nigeria because it's on the gray list, right? South Africa as well was recently on the gray list, so was Dubai. So the fiat system is, you're extremely constrained into where you can move money. And on top of that, the fees are ridiculously high. For example, to Africa, it's an average of 10% to send money. To Latin America, 6%. To Southeast Asia, it's another 5%, right? And on top of that, you're waiting 2 to 5 days, and the transactions might not even settle.
Well, just what Mo was saying, agree with, and I think the smart regulators, will figure out that this isn't drawing liquidity out of their local currency. It's going to add to the overall health of their economy. And from my perspective, things are easy to pick apart and to say, okay, well, this is bad because X and Y is out of reason, but the overall health of economy will improve with more resources, liquidity, faster transactions, and whether it's in local currency or US denominated stable coins like USDT, I think it's better overall. So I think the smart regulators will see what way the wind is blowing, for sure.
And, one of the sponsors here, MasterCard, they have this explicit goal of like 1 billion bank accounts over the next decade, right, across emerging markets for unbanked or underbanked people. You can't do that in the traditional sort of banking paradigm, right? It's not designed for that. It's like circling squares, right? But with a crypto wallet like Sorted, that's the only way, literally, possibly, you can bank humanity, right? And we think about sort of the opportunity that will drive in enabling more commerce for more people in an equitable, frictionless way. This is literally one of those internet moments, like where people are starting to go, aha, like, oh, I can open an M-Pesa account, which, by the way, the mobile carriers figured it out a long time ago, right? No reason to reinvent the wheel. And now here's an opportunity to drive sort of global scale and standards. And to a certain degree, because it is software based, like a WhatsApp in many respects, there's not a lot that regulators can do to stop it, other than, like I said, I think, it's better to have a disclosure regime, so people know what they're getting into.
So that billion bank accounts number, that's only realistic using Web3, right? It's not in a traditional sense.
Yeah.
Yeah. And what are the timings on something like that? Like, give us an idea of the sort of how quickly you can do something like that? Not just Fonbnk, anyone.
I mean, I think we're on the track for that. There's new stats going around that Web3 specific protocols are growing faster than the internet, right? And I think one of the things, kind of another pet peeve of mine, people talk about like, oh, there should be a global Venmo. I said, it already exists. They're called crypto wallets, right? And as long as you are, consolidated on a network or a standard like a Tether, you can have different wallets at different parts in the world, and as long as there's liquidity for on and off ramping, you can also be near frictionless to do that, right? And it's a many-to-many type of relationship. So the infrastructure is laid.
Sorry, Stephen, were you going to say something? Okay. So our focus is very much obviously on Africa. Are there any countries on the continent that are really leading the way in particular that anyone would like to highlight?
Well, I'll just give a small example. I don't think it's a country, well, maybe some people don't think it's a country, but Somaliland, that's a place where we're working with the central bank to have the first regulated on and off ramp there, and they've been super helpful. And for various historical reasons, they're trying to integrate themselves more into the local system. Excuse me, more into the local system. More into the global system. So I would just kind of shout out to Somaliland that they've been really great. And if anyone here is from there or knows people there, please come up to me after.
Very good. And then, so Stephen, earlier on you mentioned consumer protection, and I just wanted to pick up on that as well. What is currently being done in terms of consumer protection at the moment? The chat from Rayness mentioned before about building trust, building consumer trust is super important. What are, I guess, the consumer-facing brands doing in order to build trust and, I guess, building the market?
I mean, at least for what we're doing is we're not exposing people to the bad sides of cryptocurrency, i.e. all the shitcoins in the market. Last Friday, 52,000 different cryptocurrencies were created in one day. So that's a phenomenal number. And out of the 52,000, I bet 51,998 are now dead 6 days later. So yeah, crypto is great, but if unleashed in its full kind of beast mode, people lose serious amounts of money. So I can only speak to what we're doing, limiting what people can interact with in order to protect them. And then, you know, we're integrated with Fonbnk, great provider, and then they have, you know, certain compliance guardrails, things in place that we adhere to that provide protection that, you know, money's not going to the wrong place. So, like, do the simple stuff right, understand who the counterparty is, you know, understand what spoof transactions look like, all of that sort of stuff. And I think you're kind of 90% of the way there.
I would add, it's old computer term, WYSIWYG. What you see is what you get, right? And that's where I go back to disclosure. You know, when someone on or off ramps with us, we tell them exactly what they're going to get when it settles to their wallet, so they can reconcile that. And I think that is not the case for many different sort of crypto projects and as many of these different coins that come out. You know, buyer beware. I mean, but on some level, many of them are like trading cards or collectibles that people think could be more valuable. But at the end of the day, it comes down to proper, clear disclosures designed for your consumer so that they can, whether it's written in a locally relevant language, it's clearly laid out, not made overly complicated in any particular way. And I think that's sort of the first step and table stakes for sort of better sort of trust in the crypto space.
Yeah, and I think that we should have clear regulations, especially into what is a security and what is not a security, and really like determine who can invest in what. Like, for example, we have all these accredited investor laws in all these different countries that's supposed to, you know, protect retail investors, and there's nothing like that for the crypto industry. I think having clear regulations that clearly define what is a security, what is not a security, and most importantly, have regulations that can foster innovation, but not stifle it. Like I think that's the most important thing.
Okay, Chris, I'm coming to you, but I just wanted to ask, so you talked about, you know, the importance of regulators. How do you personally, or how does Mansa engage with regulators at the moment?
We don't.
Okay, and why is that?
Because we don't, because we're not engaging in any regulated activity. Yeah, but like all the companies that we work with are licensed payment companies, so we have no need to engage with any regulators.
And do you, in the future, do you foresee yourself being part of that discussion and trying to influence?
My co-founder says yes, so I'm going to say yes.
I would listen to her. She's sensible. Sorry, Chris.
I think one of the areas too that I think there's significant opportunity for the African continent is tokenization, and where you're going to see this sort of convergence from what's a security, what's not a security. They're already talking about it in the U.S. are tokenizing securities, right? And one of the challenges, like if you wanted to buy Apple stock, you could, in many countries outside the U.S., it's not available. Well, in a tokenized format, in the same way that you might buy, or get a few dollars of USDT in your wallet, you can now get your favorite stock in your wallet. And so that's something where I definitely think it's going to be occurring sooner rather than later. But it also will apply to any number of sort of existing commodities and securities, whether that be sort of fixed income, equities, anything in between. And with DeFi, you could create all types of complex sort of projects now. So it's going to be a lot of things coming on. So I think regulators need to have an open mind and willingness to learn.
And at what stage do regulators actually engage with the companies who are consumer facing as well? Because we sit on panels, we hear regulators must do this, they must do that, and it almost feels ethereal. Like, at what stage are people actually engaging and giving like real life input and insights?
I think at all stages, but it just depends on sort of what they do versus what they're what they are versus what they're not. I think in this business, it's, you know, it's really important to understand in many cases like what you're not. I think one of the challenges with a lot of regulators globally is if you come in and say, hey, I'm doing something, they're like, well, I don't know what this is, so I don't know that we can regulate it. I looked on my checklist, it's not there, you know, until it is, right? And so these are the types of things that I think this sort of new era of regulation that I think is being pushed by the US will address it on more global scale.
Yeah, and just to add to what Christian has just said, right? Like, I think the new American administration will take the lead in regulating crypto, and we'll see like a lot of countries adopt similar regulations. Stefan?
Yeah, well, I can just say, like, as soon as, like in a startup environment or with small companies, as soon as I hear regulation, I see, or I think cost. As soon as you start talking about regulation, totally agree. If you go to a regulator and say, "Hey, we're doing this. What bucket do we fall into?" If they ask you for a formal written response, you're probably going to go to a law firm. You're probably going to need a compliance officer. Then you're going to need a governance board. Then you're going to need some type of risk committee, and then suddenly a year later, you've 6 more people working in compliance that you didn't have. So, I think for startups, for young companies, respect the regulation, but realize that if you go down that road, unless you're doing something explicitly that needs to be regulated, there's going to be cost, and you have to have enough runway to bear that cost. Otherwise, you're screwed.
That's interesting. And then, so obviously there are some issues around regulation that could be a barrier to scaling as well. Just bringing it back just to the Africa kind of question, obviously there's still a huge informal market as well. How much of a barrier to entry is that for the kind of the scalability of stablecoins and Web3 products?
Just quickly on that, because I looked at the figure this morning, so it's fresh in my head. I think in all of Africa, the 64 million informal merchants that study came up with. So I actually don't see it as a barrier. I see it as an opportunity. So give people a POS system, simple app, whatever it might be, and they start. So yeah.
I mean, again, one of the reasons why we got into our business the way that we did was we tried to sort of leverage the assets that people have on them, right? While people may not have a lot of money, everybody has one of these. And if you can get them to download a piece of software in some way that can now start transacting value, that's a really powerful thing in distribution mechanism. And in many respects, like, this is sort of the alchemy that we're all trying to drive for, is how you can get more people to download your software and start transacting in these informal economies, whether they be in the real world or online on chain.
So there's a Chinese saying that says the best fish are found in muddy waters, and I think that perfectly describes the situation in emerging markets where you have high inflation, low banking rates, so on and so forth, right? Like, I could list like the problems all day and we still wouldn't be done. But on the flip side, I think that is the best opportunity for Web3, for stablecoins, and for new technologies to come in and really have an impact and improve people's lives. And once you do that, I believe that's where you can hit really rapid scale. So I think the informal market is actually a benefit and will force us to innovate.
Interesting. And you use the word alchemy, which I love. So what do we need to spark the alchemy and put to scale? Is it just continued mobile adoption? Is it more companies who are consumer facing, who can kind of reach beyond the kind of main hubs, or a mixture of everything?
I think simply it comes down to value proposition, right? How is your product going to better impact people's lives in a way that they can see it in real life, right? A shout out to my partners in the Sanoh ecosystem and MiniPay, who've done a really fantastic job of this. But you want to be able to differentiate yourself and come to people kind of where they are and how it will benefit them. Everything from, hey, work with us and we'll, we'll top up your mobile phone, right? We will allow you to transact remittance for free, right? These are things that are important to people and is a huge differentiator that only, I think, Web3 and this type of technology can really enable.
Thank you very much. We've only got 5 minutes left, so I'm going to ask one more question, but if anyone has any questions, please have a think, and then we'll open the floor up to Q&A. You have 3 experts here to ask questions. Just, I guess, to summarize then, who has the most, who's going to benefit most from Web3?
I think everybody.
Yeah.
I think the African consumer is going to benefit. People in emerging markets are going to benefit. Businesses are going to benefit because of the ease of doing business abroad, ease of receiving payments, sending payments. Governments are going to benefit because when things go on chain, you can track things like taxes much better, right? And I think Web3 stablecoins in particular are going to completely redefine the movement of money in emerging markets.
The tax collection angle is fascinating, actually, because I think that it's an area that's woefully been kind of ignored over the years on the continent. Chris, your thoughts?
I think humanity will benefit from it. I think one of the big takeaways from this last era of sort of Web 2 is you have these global behemoths that control everything from what we see to what we think in our governments, and the distributed ledgers available on blockchains is a way now to break that up and enables people again to transact, to do business, in a way that benefits them where they are and how they want to do that.
Last but not least,
yeah, well, I'll
Steven?
just copy what everyone else said, but everybody,
Everyone.
and fundamentally, crypto can give you a Swiss bank account in your pocket, which 20 years ago would have been inconceivable, and USDT are essentially negotiable bearer bonds that you can bring anywhere. So to kind of think that we have a Swiss bank account in our pocket is amazing. So I think everyone can benefit from that, except the Swiss.
Thank you very much. Does anyone have a question? I see this gentleman over here in the white t-shirt. We've got a couple of minutes for questions, so I don't know if anyone's got a microphone that they're going to send round. When you ask your questions, please stand up and say where you're from and keep your question really nice and short and concise, please. And if you have someone who you'd like to direct it to, please let us know. Thank you.
Cool, hi. So great panel, thanks for that. So my name's Adi Aditola. I work for an institutional liquidity provider, so I completely buy into the use case of stablecoins, cross-border payments. I just wanted to go on the regulatory thing because you kind of flogged it quite hard, but the conclusion from what I hear, correct me if I'm wrong, is that it's all in the infancy. They don't really know, and it's not very clear. But what we're seeing is that that's causing some institutions who are concerned about their brand actually engaging in using stablecoins. So kind of what's your view on that? How do we accelerate that process? Because we're seeing tremendous traction, but that's a hurdle that needs to be addressed.
I mean, I grew up in the cash management business, and now we're doing sort of global trade. I don't know how you move money around globally, especially in many of the economies here, if you're not using stablecoins, right? And I think the era of stranded cash and opportunity is at its end. So I think if it's kind of old thinking in the same way many of these, people were like, hey, I like to read my newspaper every day. It gets delivered to me versus go to the news on the internet. It's just kind of old thinking. So, and now you have global institutionally recognized brands, institutions in stablecoins, and there will be more. And realistically, you'll probably start seeing a lot of Western banks start launching their own stablecoin as a way to do business with them globally versus opening up, growing in a traditional sort of full stack banking methodology.
Thank you very much. Unless someone has like a real burning question, I think we are at time. No? Okay. All right. Well, please give a round of applause to Stephen, to Chris, and to Mouloukou as well. Thank you so much, gentlemen.